In our previous session, we looked at personal household budget, and we've also seen the different components of how to develop a simple household budget, and that is you should identify what are your titles are, from what period you are reporting, identify your different income sources, list down your expenses, and also transfer your savings plan into your budgeting plan, and at all times have an ending cash. And we've looked at the different reasons why having a simple household budget is important. Now in this session 4, we will be talking about tracking daily income and expenses. Now, why is it important to keep tracking of your income and expenses? We will look at those reasons why it is important. But before that, by the end of this session, you will be able to understand what tracking of income and expenses is all about, and how best can you use this daily tracking of income and expenses to make good decisions, good financial decisions. So when I say financial decisions, I'm referring to personal finance. Okay, so at the end of this session, you have to seriously see the importance of tracking your own finance and start tracking it. So that means you should be able to track your own personal income sources, also track your expenses at the same time. Okay? So, coming to my point that I've stated earlier on, what is a track? Now, a track is basically, it's like a roadmap that shows where a person normally follows. Now, when we say tracking of income and expenses, we are referring to how best you as an individual business person need to track your own personal funds. From what sources are you getting your money from or getting your salary from? And from what sources are you spending the money on? So when we say spending, we are again referring to personal spending habits and not business spending habits. Okay, so if you look at your resource book, if you could flip the page to the heading session 4, tracking daily income and expenses, and flip to the next page, you will see some examples. Now go straight to the section that outlines the heading that says Jenny's income tracking sheet for week 1. Okay? So once you're on Jenny's income daily tracking sheet for week 1, we will start. The same applies to you moving to the page that says Jenny's daily expense tracking sheet for week 1. So you should have some markers just to put line in between so that you know the difference of those pages. So when I explain, it's easy for you to go through and follow. Now the same applies to daily cash flow tracking. So put a marker, put a division in between your pages so that you could flip through. So I now give the next 2 minutes for you to do that. All day? I'm pretty sure that you all have identified and put markers to those 3 different pages. Now let me begin by explaining each of them. So tracking of income and expenses comprises of 3 additional tools. The first one is you should know how to track your income sources. So it formulates chart number 1, which is called daily income tracking sheet week 1. The next is you should know how to track your expenses, and it should formulate chart number 2 that says daily expense tracking sheet week 1. then you should have chart number 3 says daily cash flow tracking sheet. So the purpose of having this cash flow is it should give you the summary of your overall funds movement. So when I say fund, again, I'm talking about your personal funds, how it moves from start to finish, from your income to your expenses. So your cash flow should give you a significant indication of where you stand, your financial behavior pattern. That is the reason why we also incorporate cash flow in it. So you should have 3 additional tools: income tracking, expense tracking, and cash flow tracking. Now let's look into detail in each of them. Let's start with income tracking. In income tracking, you have to have different columns and rows. Now the first column should comprise of your sources of income. You should list from which source you're making money or you're receiving money into your own personal life. Okay? So you have to list them down. You will see I have some examples about Jenny. Because she's a subsistence farmer and informal sector business owner. She has farm income, wages from her husband, business which is a trade store she owns, and then she do receive some gifts or money coming through from One Talks. Okay, that is her major source of income she has identified. Now to you as business owners, you would also identify what are your major sources of income. If it's your salary only, then that means that you have to only have one source of income, which will be your own salary. Now the next column comprises of the number of days. Since we said that week 1, it should comprises of 7 days. That's including 5 working days and 2 weekend days. Now with the example that I've given, you will see that we're starting only from day 1 to day 3. Why? Because by then you should already understand the concept. So we don't need to go into explaining all the other days. But all in all, it is important that you should keep day 1 to day 7 income tracking sheet record. So this tracking sheet record you should keep at the end of every day, not in the beginning of the day, which is morning. And most of the times before you go to bed. Before you go to bed, it becomes as your tracking sheet or your checklist for your own income source. So you should know how much money you are making from your different income source in one particular day. So let's take for an example, Jenny's case in terms of farm income. Before she go to bed on day number 1, she realized that there's 2 sources of income coming through on day number 1 alone. And that is from sales of her piggery or pigs, and then from her trade store, 200 kina. So that means on day number 1, 2 major sources of income is from these 2 sources worth of 2,100, which is listed at the total income at the bottom, the last row. Okay. So day number 2, she wakes up, start a day. She realized that she only make 180 kina on day number 2 alone from one source of income, and that is from her trade store. Day 3, the same. Now, maybe because her husband is working, the husband gives her 500 kina as part of the salary to take care of the necessities of the house. So it's a source of income. She's listing it down as well. Now, her store still makes money. She makes 150 kina. So a total money she makes or earn in day number 3 is 650 kina. So the same applies to any other days. So let's just assume that we have reached day number 7. So that means Jenny's total income for 1 week is 2,030 kina. So now, keeping this income tracking sheet, it has shown Jenny that from these income sources, you have made 2,030 kina in 1 week. Okay? So the same applies to in expense tracking. The approach is the same. Keep your expense tracking sheet at the end of the day. Now, I did mention earlier on about receipt. So the receipt also helps in this tool as well. If you keep good receipt, before you go to bed, you should know from which sources of expense you are spending money on. You simply list it down. Is it from a receipt from you paying your loan to BSP? Or is it from the store goods, from Stop and Shop, from City Pharmacy? Okay? Or from you buying supplies for your businesses? Or from optional spendings like buying units towards Digicel? Or from Switch, so Bettelnut, all this. So the goal is at the end of each day, day 1 to day 7, you should know how much money you are spending. So for Jenny's case, when you looked at it, she has spent 1,030 kina on day 1 alone. Day 2, she spent 125 kina alone, only, sorry. And day number 3, 470 kina. So let's just assume that her total day 7 expense is worth of 1,625 kina. So let us now try to compare. Now once you have an income tracking sheet and expense tracking sheet, it allows you to compare the general movement of your money. So that means she makes 2,030 kina in 1 week. She spends 1,625 kina in 1 week also. So that means she's within the scope of her keeping within her finance, knowing that in order to develop a budget, one of the steps is her income should at all times more than her expenses. So her expense is less than her income. Okay. But she also remembers that she has saving goals to achieve. So saving goals is not expense, but it is seen as a good form of you taking your money and putting it away. So therefore it's listed under expense tracking. So on day 1, she decided to put aside 100 kina, day 2, 50, day 3, 50. So that means at the end of the week, she's putting aside 200 kina just to meet her saving goals. So that leads us to say why keeping an income and expenses tracking, because you will have to compare. Now when you compare it, you will see that in a sources of income, the only source that earns a regular money is from a trade store. So now keeping this income should literally give you that indication as well in your life. Expense as well. It will allow you to see from which sources you are spending more money on, and you have to reduce your expenses. Now let's move on to tracking your daily cash flow. Okay. So as I've stated in the first half of the session, that cash flow is that you have to know the general movement of your both funds. So in order to know the general movement of your own personal funds or your personal finance, you simply need to take only the totals, the total for your income and the total for your expense, and classify or put them down in your cash flow tracking sheet. So looking at the example, again, it's a 1 week cash flow tracking. So we have day number 1 to day number 7. And on our left, you will see the starting cash, total starting cash, total income, total expense, savings, and ending cash at the bottom. So when you looked at it, it's the same approach of how you develop a simple household budget. Again, because one of the reasons of all these 3 tools is to ensure that you still stick to the budget you've created. Now, for day number 1, starting cash for Jenny, nothing. So when you look at the income source, there's no column or no rows that say starting cash. So that means it's 0. The total income for day number 1 is 1,200. Where does it come from? It comes from here, day number 1. 1,200, and as I've stated, we take only the total. So that means any total under here is transferred down here. Day number 1 alone. Same applies to day number 2. All the totals here comes down here. Total here comes down here. Okay? For expense, the same. The total for expense on day number 1 falls down here. Okay. So day number 1 expense is 1,030. You will see I have 1,030 out here for day number 1 alone. Day number 2 for expense is 125. I have 125 out here. Day number 3 is 470. I have 770 out here. So you will see we only take the totals and put it here. Now it says savings. We simply get all the savings from day number 1, day number 2, day number 3 and put it down here. So all you are required to do is you should add your starting cash to your income minus your total expenses and then minus your savings. It should give you your ending cash for day number 1 alone. So for Jenny's case, before she goes to bed on day number 1, she realized that she has an ending cash of 70 kina. Then she goes to bed. So when she wakes up the next day, it automatically becomes a starting cash for day number 2. Okay? So again, day number 2, 70 kina, you have to add total income minus 125 minus 50 kina. The ending cash for day number 2 is 75 kina. Now again, Jenny didn't use the 75 kina. She goes to bed with this money. She wakes up the next day. It becomes a starting cash for day number 3. So the same routine continues. However, in the event that she decided to consume the 75 kina on day number 2, what will be a starting cash for day number 3? Okay, that's a good question. So that means if she consumes 75 kina on day number 2, a starting cash on day number 3 is automatically 0 because she consumed it. Maybe she decided to use it to buy top card in the night towards rugby game or something like that. Okay. So the same principle applies. So having these tools should speak to you. So your income, your expense, and your cash flow. So we already said that cash flow is the general movement of your funds. So that means you should again compare them. So if we are to compare, you will see that each of the day ending cash started to increase. And is it a good personal finance attitude or not? It is. Okay? It is a good personal finance attitude. Why? Maybe it's telling Jenny that you are disciplined, your funds are increasing, you're doing well in your personal finance. That's one. Another thing also she needs to compare is you will see that she makes a lot of money on day number 1. She spends also a lot of money on day number 1. And it is recorded in the cash flow as well. She should check, is it necessary to make a lot of money and spend a lot of money? Or is it necessary to make a lot of money and spend less? So again, to conclude this session, I would want to say that in order to stick to the budget you've created, you should have additional tools that supports you. One is income tracking, the other is expense tracking, the other is cash flow tracking. So once you keep this good record, it should give you an indication of your estimated summary budget for the next period. That's that. On the other flip side, individually, it's going to instill in you your discipline in terms of your personal finance, so that you should have enough money to manage your own household needs, as well as enough money to save up to meet your future goals. So on that note, we have come to the end of session number 4. So thank you, everyone.